What is up, YouTube family? My name is Mike the CPA, and welcome back to Money and Life TV, the channel people come to learn about finances, investing, taxes, and more. If someone was to ask you, what type of income was better, dividend income or rental income? What would you tell them? How would you respond?
I can tell you one thing, I would want both.
In this video, we're going to explore that question in great detail, and by the end of it, you may find that you actually desire both. We are about to dive into the video, but I have a quick favor to ask. If you enjoyed today's video, let me know by dropping a like, leave a comment below, and if you're brand new to the channel, please consider subscribing so you do not miss any of our future uploads. When we're talking about dividend income versus rental income, we're actually talking about two different types of asset classes. Okay, let's see, how do I explain this?
Are you trying to say it's like trying to compare bananas and oranges?
Thanks, Shipper. That's actually a really good analogy. Don't you mean apples and oranges?
No, forget apples. I like bananas and oranges.
Okay, fine, Chipper. Bananas and oranges it is. It's a good analogy because comparing dividend income versus rental income, it's not a banana to banana comparison. It's very much a banana to orange comparison. These are two very different asset classes with very different attributes. Dividend income is primarily generated through owning paper assets, versus rental income that is generated through owning real assets. Instead of thinking which one is better, I would encourage you to really think about which one is more suitable for the lifestyle you're trying to build. And I think as we progress through this video, that answer is going to become clearer and clearer as time progresses. Let's start off by talking about a subject people love, which is passive income. Both forms of income are very passive, meaning you receive money that you no longer have to trade your time for, but one is more passive than the other if you were to ask me. If you want to know my opinion in terms of which form of income is more passive, dividend income really takes the cake here in my opinion. With dividends, you simply invest in the company stock or ETF or mutual fund or whatever and wait for the money to be deposited into your bank account. With rental income or real estate or income from real estate, you will eventually have a check hitting your bank account, but there's a little bit more to manage. Being a landlord is not always fun. You may get a call in the middle of the night saying that the toilet is clogged. You may have to evict someone who is damaging or not taking care of your property. A lot of times these are your own family members or friends. It really sucks. Worse yet, you may have to deal with a renter who doesn't want to pay you and always seems to have an excuse as to why they are late on their rent. For some reason, they can't pay you because they're too busy flossing their cat's teeth, or whatever it is the hell they do. Now, of course, you can get a property manager involved to help you manage the property, but really, if you want to maximize your profits, it's crucial that you're able to keep an eye on the property itself every once in a while, because no one is going to care as much about your profits as you, not even the property manager. Just like anything else, there are good and bad property managers, so unless you're monitoring the situation a little bit yourself, you're not going to find out which one of the two you have. So real estate can be awesome, rental income is great, but a little more legwork is involved. Now let's compare the two, dividend income versus rental income, when it comes to yields. Where can you get the best yields for your money? If you're looking for a higher yield on your money, this is where I think rental income begins to shine. With rentals, depending on the type of property and the deal you get, you may find yourself with an average yield of anywhere from 5, even up to 10% or more on your money. Dividend yields, the yields aren't quite as attractive because the average dividend yield is roughly running 2 to 3% on average, so it's not a lot. Now, if you venture off into real estate investment trusts, which is a way you can invest in the stock market into real estate by purchasing things known as REITs or real estate investment trusts, you can get higher yields such as 4, 5, 6, 7%. But generally speaking, dividend yields are often lower than if you were to own the physical real estate outright and rented it out to somebody and were a landlord. Of course, there are a few other ways to get higher dividend yields in the stock market, which was publicly traded partnerships and corporate bonds. This is a question I often find people have is, all right, Mike, if I choose to go the dividend income investing route or the rental income or real estate investing route, which one is going to make me the richest the fastest, or which asset class is going to allow me to retire the soonest? That's what I really want to know. Although both asset classes can lead you to the same goal, real estate has been the more consistent victor in allowing people to retire sooner and building wealth from what I have observed. With the exception being if you found the next Amazon stock, of course. If you were lucky enough to invest in the Microsoft when it began or Amazon, you could have made a killing really quickly. So there are some exceptions in terms of which one can make you richer faster, but I think in the long run, just from what I've observed, definitely real estate is the way to go. You may have seen the shows where people quickly buy, fix up, and flip the properties for huge gains. You've probably heard of the stories of people who buy and hold real estate and rent it out for monthly cash flow and keep repeating this process until their passive income exceeds their expenses. So those are just some of the ways to accumulate wealth with real estate. Like I said, there's many different avenues, but those are just some of the ones I want to mention. Now let's talk about dividend income. Now dividend income, in my opinion, it is easier to build a passive income through dividends, but it takes longer and it takes a lot more capital, money to invest. So it's a slower way to get rich. So oftentimes if I post a video on dividend investing, there's a lot of people saying, hey, I'm going to retire in the next 5 years. Well, it's like if you're starting from zero, that's probably not going to happen. Dividend income is a slow way to get rich. It's very passive. It's a great way to make money and build a nice retirement income for you, but it's not going to happen overnight. It could take 20, 30, 40 years, depending upon how much money you can invest each month or each quarter. Now, if you say, Mike, well, I still really want to invest in the stock market. I'm really not too keen on real estate. So is there any way to get richer faster in the stock market besides dividends? And I would say yes. If you really want to be efficient in terms of really swinging for the fences, then instead of just focusing on dividend income, I would actually focus on growth-based investments. And that's going to allow you to get higher returns on your money. Now, of course, that's not guaranteed. And so you can grow your money, 10, 15, 20% per year with the right investments using a growth strategy, but it's not guaranteed. So there's definitely pros and cons with investing for growth that many investors like yourself might not feel comfortable with. So it's finding the right balance of what works for you and what you can stick with in the long run and be successful with, if you were to ask me. And at least with dividends, you are getting a portion of your investment back each year. Plus, you still have a chance to receive capital appreciation on top of that. For example, when I'm filming this is August of 2019. Some of my most successful investments this year in 2019 have been dividend-paying blue chip stocks. Even though because the market's been a little tipsy-turvy this year with all the trade wars going on, these interest rate fluctuations with the Fed getting involved, but there's like Procter & Gamble, it's one of my best stocks this year, and I'm up over 20% this year alone. Whereas many of my tech stocks are tech-based ETFs that would be more growth-focused, aren't achieving or aren't performing as well. Now let's take a moment to talk about taxes. How is dividend income taxed? How is real estate income taxed? Let's cover this real quick so you guys get a good feel for what your tax situation is going to be from this kind of income. Starting with dividend income, it can be taxed at either the marginal tax rates or capital gain rates, depending on if it's a ordinary dividend or qualified dividend. I have separate videos on this. I can link them below if you'd like to check them out. For most Americans, their marginal tax rate falls between 10 up to 24%. That's where I find most Americans fall in terms of the income scale, whether they're single or whether they do married filing joint. So what this means from a tax perspective, when it comes to dividend income, depending on their marginal tax rate, for every dollar of dividend income they earn, they're either going to pay 10 cents up to 24 cents of every dollar. The good news is if those dividends are qualified dividends, then they get the special capital gain rate treatment, which is a lower tax rate. And for most Americans, their capital gain rates are only 0 to 15%. So in other words, they would pay only, out of every dollar, they'd only pay 0 up to 15 cents per dollar on every dollar of dividend income earned. Real quickly, how is rental income taxed? I think you're going to find it's pretty straightforward. You may have heard that rental income has numerous tax advantages, and it absolutely does, but I'm not going to go into extensive detail here. We can save that for a whole nother video. That's a whole nother course, okay? But your rental income, you're not taxed on your gross rental income, you're taxed on your net rental income, which means it's the rent income minus all of your expenses. So whatever that is. So if let's say you make $10,000 in rent, you have $6,000 in expenses, which means your net profit or your net rental income is $4,000. Well, then you would pay taxes on $4,000 of rental income, at whatever your marginal tax rate is. Rental income does not have any special capital gain rate treatment. It's just taxed just like ordinary income. Ordinary income you pay on the net rent you receive.
Mike, which is easier to keep track of taxes? I want to know because the IRS Eagle, that thing scares the out of me.
In terms of which one is easier to track for tax purposes, hands down, no questions asked, dividend income is by far the easiest to track for taxes. And the reason that is because the brokerage company you're with, whether it's Robinhood, whether it's Ameritrade, M1 Finance, whatever it may be, they're going to send you a statement in February of each year that totals all of your capital gain income, your dividend income, etc., all on one tax statement. And that's rental income. It's a lot different. You actually have to keep track of all of your expenses associated with the property. You might have management fees, depreciation. You're going to have maybe repairs, supplies, utilities. There's all these different expenses that can go into it that you want to keep track of. Having a property manager helps because they can summarize a lot of those, the income and expenses on one page, but it doesn't mean it's going to encompass everything you need. So there's a lot more record keeping involved with real estate because it's more like running a business, whereas with a stock or with dividend income, it's more like buying into a business and you're just collecting a check. Real quickly, let's talk about the risk associated with dividend income and some of the risk associated with rental income. With dividend income, there's always the potential that a company starts underperforming or begins struggling financially. When this occurs, what usually follows is a temporary reduction in dividend payments or possibly cutting the dividends altogether. Now, most recently, I think we saw this with General Electric. A lot of people held on to that company stock for a long time just for the dividend, but fundamentally, the company started to underperform and financially it just started going south. So now we have General Electric stock, which has plunged in value over the last few years and virtually pays little to no dividend at this point. So there's always the business risk that the business may start failing financially and may need to either temporarily reduce the dividend or completely cut it all together. That's the risk, I think, with dividend income. That's one of the risks. And rental income has its own risk as well. I mean, it's no cakewalk. There's always the risk that a tenant, your renter, could leave and you might have trouble filling the vacancy. Also, there's the risk that that tenant could damage your property when they leave. I actually knew of a person whose rental property wasn't in the best area, had very kind of shady renters, not the best renters, unfortunately. Well, one of the tenants, when they had to go and evict them, they actually burnt down the entire house. So real estate is definitely not without risks. So beyond, just losing your tenant for the chances of potential damages, there's other expenses that might creep up as well, that might increase over time, such as your insurance cost to insure your home. Of course, also, property taxes can increase over time, which cuts into your net profits on your rental. All right, now let's talk about which investment, dividend income or rental income, gives you more control. With dividend income, unless you're a major shareholder of that company that owns more than a 50% stake, you're basically at the mercy of the company. So you virtually have no say in how that company conducts its business. With rental income, there's a lot more control in terms of what you can do to maximize your profitability. You can raise rents, you can be more creative with improvements you make to the property to extract higher rents. You can manage your expenses or find creative ways to reduce expenses to continually increase your profits. You can decide whether you want a property manager or don't want a property manager. There's a lot more control of what you have there. You can also do a 1031 exchange into a different property to avoid paying tax on the sale. So like I said, with rentals, a lot more legwork, but also a lot more control, in my opinion. All right, guys, real quickly, just rapid fire mode now, rapid fire time. I want to cover a couple other factors with you guys regarding dividend income and rental income. I think these are just some other key takeaways or things to know before making your decision of which one to invest in or both. So the first one to mention is both dividend income and rental income can increase over time. Dividends can continually increase their payouts, and you can continually increased rents in many areas of the country. Both of the underlying assets have a chance to increase in value. That's important to understand. Just because you have a dividend yield doesn't mean the stock itself isn't rising in value. It can certainly appreciate. And just like with rentals, just because you're receiving rental income doesn't mean the value of your property isn't increasing at the same time. So it just depends on what the market's doing. Now, is one safer than the other? I think it really depends on the sophistication level of the investor and how they manage the investment. I think both investments can be safe depending on how well you understand them. So as long as you know what the risks are and how to manage those risks or mitigate the risk, I think you'll be fine. It really comes, the more experience you have with those kinds of investments, I think the better off you're going to be. One thing I forgot to mention was leverage. One nice thing about rental income or real estate is you can borrow from the property to help you purchase other properties. Not something you can do with dividend income. Of course, with dividend income and rental income, both have tax advantages. On the dividend income side, we have qualified dividends, which are taxed at the lower capital gain rates, which we discussed earlier in the video. And with real estate, it has actually real estate is one of the best assets to own, and one of the best in the world in terms of tax deductions. Bottom line is real estate has crazy amounts of tax deductions available for a real estate investor, but it's too broad of a category to go into detail here. If you guys would like me to produce a video in the future on tax deductions for real estate, please let me know down in the comments below. I'd be happy to produce a video on that. All right, guys, I have 2 awesome articles for you to check out, and some of the articles I checked out before making this video, I'm going to leave links below. One's from Seeking Alpha, and one's from Zach's Finance. I think both articles are good. I think you're going to get a lot out of them. And they both explore the differences, the pros and cons of investing in dividend income versus investing in rental income or investing in real estate. So check them out if you have time. I'll leave the links to those below. All right, ladies and gentlemen, that is all the information I have for you today. I hope you got a lot out of this. If you did, let me know by dropping a like. And if this is your first time here, I just want to say welcome. Here on Money in Life TV, our goal and mission is to help you become fiscally fit. And we do that by teaching finances, investing, taxes, and more on a regular basis. All right, everybody, until then, it is always an honor. I am so honored that you guys spend time with me here on YouTube. It means the world to me. I love interacting with you each and every week. So I'll see you in the comments. Take care, everybody. Have a great week. Live life uncaged. Peace.